Hello everyone, welcome to the channel. Today it was a very big fall which happened in the market mainly because of US and Iran war tensions which has started. See, nobody can predict such kind of moves. I'm honestly saying nobody can predict such kind of moves because market was clearly moving upward trend, right? And all of a sudden if such a big move happens, we cannot predict this move nor we can regret why we did not capture. Okay, so understand both these points very clearly. You should not think and go back to your trading portal and see the price of Nifty 25,900 or 26,000 PE. What is the position when it opened? What is the value when it closed? How much you would have made profit if you had bought this much lots for your capital? Don't do all that. It is mere waste of time. Even if I give you 1 lakh rupees and if I ask you to trade, if I ask you to enter put, if you had bought the contract at 100 rupees for 1000 quantities, whatever the case may be, you cannot hold the trade for this long. Nobody can hold the trade for this long. The moment they see 20 to 30 points or 100 points in chart, they will start closing. This is the human psychology because loss aversion is one of the major important things of trading psychology. When you are entering into a trade, your first and foremost mindset would be like, if I make certain amount of money, I'll be happy. This is your first trading psychology, which will always be there when you are trading. What will be the second impact which is always there is, if I make, for example, if you have made 5,000 rupees and the moment market goes back to 4,000 and you're closing the trade, your next mindset would be, I already made 5,000. I wanted to make that 1,000 rupees more. And you will start firefighting with the market. And by the end of the day, you will even end up losing this 4,000 and even lose more amount. So you're not only lost 4,000, you lost more money in the form of brokerage and you lost more amount as part of your capital also. These are consequences of your bad psychology which you will always have when it comes to trading. How do you master this? How do you overcome all this? Is spending more time analyzing the charts and preparing a formulated plan. Our plan was very simple yesterday. What was our plan? We wanted the market to come back to our demand because market was in an uptrend, and we wanted to see a positive reaction from here. At 10:30 I posted a video today saying like, wait for the market to give a small positive reaction. The moment it gives a positive reaction, we can take the market higher. Market did not give it. Market went down. Where will you enter here? What will be your stop loss? Did the market come back to a supply and then start going? No, it just went down. Where will you enter? Tell me. Where will be your stop loss? You don't have a defined plan here. If you are entering put here and making money, well and good. You made money, good for you. Very good, congratulations. But tomorrow make sure that you are withdrawing that money and don't add back to your demat account. Seriously, I'm saying, because this profit, whatever you got today, is because of a blind trading. We are not here to do any kind of blind trading. Okay. So, what next? Where is the market? What is the market looking like in 1 day's chart? See, in 1 day's chart, what we can very clearly see is this is a mere consolidation, right? Market has not broken this particular high to continue the uptrend and then come back to a demand and continue higher. Neither market has broken the swing point of the lowest swing point and say like, I am going to continue downward direction. Neither of this has happened, right? So whatever move has happened today, it's okay. If you are captured, it's okay. If you are not captured, it's also okay. Okay. So what we can see from 1 day's chart is there is a clear demand. This is the last indecision candle before this news related to India US deals signing off, this budget sessions, everything has happened here, right? All this is mere consolidation phase which the market is currently running. We cannot mark any supplies because market has not broken structure on the downward direction. Why we are not supposed to mark any supplies is, if I take you back a little bit to the previous chart, what we can see here, we can clearly see that market is in a downward trend. in this kind of downward trend, we can mark this candle as your supply. In this kind of downward trend, we can mark this indecision candle as your supply, because these are the indecision candles which broke the structure to the downward direction, right? But now, wherever the market is, it has not broken structure anywhere. These are all internal structures which the market is breaking, and we are trying to make sense from this internal structure. So what we can ideally see is, we wanted to see a tap back. This is an extreme leg of price action, and we wanted to see a positive reaction from here and take the market higher. This is our complete course of action. This is what we have been discussing for a very long time. Market is slowly coming here, in fact coming very faster, which is not good. So we can also plan a small trade from here to here if this happens. This is going to be our plan of action for tomorrow. And there are couple of things which you need to understand. If I go back in 15 minutes, even in 15 minutes, if you see here, this is a mere consolidation. There is no structures anywhere. There is a change of character to the upward direction. This is a high. This is your low. Between this, market is ranging. So how we can plan our trades is, we need to wait and give time to the market. Tomorrow also, I will try to post a video at around 10:30 explaining you how the market is and how the market is behaving. Ideally, what I would like to see is, I wanted to see the market opening pretty big gap down, 25,100 or 25,000 range, somewhere here. If it opens inside this demand, and the moment we see here like this, we can solidly take the market higher. But this is against the trend, because the trend is pretty big negative news is happening, and for us to give a extremely bullish momentum, it is slightly tough. So what can happen is, tomorrow if the market opens slightly gap down, not very big gap down, slightly gap down, somewhere around 25,350, 360, 370, somewhere here, then what we can plan as a simple trade is, the last candle might act as your dip supply, and market can start falling from here itself. Okay, but it doesn't mean that at 9:15 itself you should enter the trade. If this move happens pretty fast tomorrow also, let it go. Understand? Let it go. At 10:30 you will see the market. I will plan and I will post a video around 10:20 or 10:15 ish time explaining you what the structure is. Wait for my video tomorrow morning also. Okay, so ideally my course of action would be, if market opens like this and if it goes like this, then I can plan and capture this small move. Okay, this itself would be like close to 200 points, although it is showing as very small, but this move itself is 200 points move. This is what I am planning to execute, but at the same time, there are many small imbalances in the market, meaning every candle is not retested by another candle. There are, you see the small red color bars, right? These are all imbalances in the market can hunt all these imbalances, go to the extreme supply and then come down also, or it can go up all the way also. Either thing can happen. Okay, so wait for the market tomorrow at 10:30. Again, I will post a video, and if you like this analysis, make sure to like this video, subscribe the channel, follow for more such educational content. Thank you so much for watching. We'll meet in the next educational video.